Hello, this is John Kvale, and this is our November capital market and financial planning review. And in our constant quest to make this better, I've got a new little device. I'm actually recording this the day of. I usually record it a couple days before, but this is our new device. So look for this. The two big challenges in doing this are audio, which hopefully this will take care of, and light. Ooh, I maybe overdid it on the light. But anyway, I haven't had quite a chance to get all this working yet, but look forward hopefully for the December and the quarterly newsletter. Okay, enough about the backdrop. Let's jump to the post, and hopefully this will move. Here we go. I'm going to get a square. All right. In this November capital market and financial planning review, wanted to reiterate this. And this first, for those of you that are listening, the first bullet point is one of two of our financial planning tips. And the first is email is the new physical address, and it's as such it's harder to change. So what do I mean by this? Looking forward, and I even say those of you that are listening, I'm pushing down to the kind of the second little paragraph. I look in the future, in the not too distant future, that we're going to be pretty much forced to use email for everything. It's a little bit of an inconvenience at times because, as this post mentions, we have to get, because it's harder. Used to, in the good old days, we could just phone up and change the email. Well, that's no longer the case because email is becoming the new way to communicate with people. And of course, crooks find out about that and they try and get in front of it. But the good thing about it, as I mentioned here, in the long term, it's much better for the environment, much greener. So this is just really to remind everybody, hey, have your patience hat on, and email is the new physical address. For those of you just listening, keep hands on the wheel. I'm just scrolling up to a neat article. I had several questions on this, and this is a quick review. And there's a shorter post that we did, and it's basically why an inheritance is usually not taxable. And I've got the link to the post here. And also, I'm going to have a longer, deeper article in the newsletter on this that adds a couple of things to it. But generically, across the board, inheritances are not taxable. Now, once you receive the funds, once the decedent transfers the funds over to you, then the interest, dividends, and any distributions may be taxable at that point. But for the most part, for the generic most part, there are exceptions. The transfer of wealth as an inheritance is not taxable. Now, the follow-up for this is the next article that I mentioned in our Why series, and I'll explain that at a future time. But the follow-up to that is that an inheritance is separate property until you want to commingle it. But that's the next part that came up after this. I was like, well, let's just do a follow-up on that. Hey, and this is a neat, those of you that are just listening, I ran across something very interesting. Doesn't look like it's going to all fit in, but I want to get the picture. I actually snapshot this graph with my camera and then cropped it, and it came out a lot better than I thought. But I thought it was worth mentioning because this is the first I've ever heard of this, and this was a speaker at the CFA program about 2 weeks ago, a week or so ago. Thanksgiving always makes us lose our dates. The gist of this is that the Fed throws us into a recession when they're raising rates at an inverted yield curve. First time I've ever heard of that. And this gentleman goes on. I'm going to try and get a better picture of this slide. I'll probably email or reach out to the guy. The crux of this argument is this going back 30 years. When the Fed lowers rates with an inverted yield curve, it stoves off a recession. I have not heard that before. Could it be data mining? Yeah, data mining is just going back and finding something that looks like it worked and in fact bringing it forward once you found it. Going to do a little more research, and I suspect you'll find this in the newsletter. We'll have a little bit deeper dive in this. We've been critics of the Fed for lowering rates. I've got to keep an open mind on this. And the reason we've basically been critics of them is because we want some ammunition in the future. If this chart proves correct, Powell may have actually created a soft landing. Soft landing is when the economy slows down and then instead of going on a recession, it picks back up. Very interesting. Again, first time I've heard of this and seen this. I want to do some more research on it and hopefully find more good information. But I looked at the chart. For those of you that are listening, I'm just scrolling back. I looked at the chart when it occurred, and I tried to shoot holes in it, and then took a quick picture of it. And now I'm intrigued. So, all right, that's our November. This is unusual. I did this post the day that it will go up, and so I get hopefully one good take at this. I thank you all for listening. Have a great December as we head into the last month of the year, into New Year's. And thank you again. Take care. Bye-bye.